Autos are just one of many industries in the crosshairs of escalating trade tensions. How do we approach this very cyclical sector?
I think the way we are looking at equities, first of all, we continue to be bullish on equities as an asset class. We are in the mature part of the bull cycle. We still believe we have high conviction that the equities will outperform. So then we are avoiding those sectors which we believe are sitting in the crosshairs of the tariffs.
Developed or EM? Developed or
for
developing?
both of them. For both of them, because it's going to be a two-way, actually more than a two-way impact. And we are focusing on those sectors where we believe there is clearly a lot of tailwinds going in. For example, technology. We believe that the technology clearly still has, it was the best performing sector in the first half. And notwithstanding the headlines on some companies, we still believe there's a lot of room there.
But again, that leadership, that market leadership that tech has given us, that go-go momentum, all of that is in question now after what you saw last week with the FANG stocks and the earnings disappointments.
So firstly, I would like to emphasize that the troubles at a few companies is not necessarily a harbinger of a wider malaise, as I would put it. That's number one. Number two, if you look at technology, and I know there are comparisons being made at the last technology bust that happened, we need to recognize that the Ps at that point in time were about 200 plus. We're talking of something like 1/10 of that, around 22p now. We're talking of earning growth, EPS growth of about 18%. So we're talking of a very different scenario versus what we had previously. So when we look at, so for sure there are a few companies which are into some kind of a trouble. And for different reasons, not necessarily core business financial performance. And those need to be taken slightly differently than what the issue is for the rest of the industry, which seems to be doing pretty well.
Baidu, Ali and Tencent, the BATs, are they a stronger investment proposition compared to the FANGs?
Yeah, I think when we look at it from I would say generally speaking, the emerging market technology sector clearly is undervalued relative to the developed market technology sector, so there's clearly value. When we look at it, so there is that value when almost half the valuation of the developed markets. That's number one. Number two, when we see the broad strides which are being made by the emerging market technology companies, I think they are clearly on a tearaway growth in terms of their business models. So clearly there's value there as well.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.